Hello everyone. In this video, I will share some useful tips and strategies to help you with your trading. If you find this video helpful, please give it a like and subscribe to the channel. Now, I'd like to review the USDJPY chart from the past few days and discuss the outlook for the future. Before we begin, let me explain two key points about my analysis method. The first point is multi-time frame analysis. To confirm the long-term trend, I start by analyzing the weekly chart, followed by the daily 4-hour and 1-hour charts. Checking the long-term trend is essential in trading. When making an entry, I also analyze the 15-minute and 5-minute charts. Additionally, I follow Dow Theory for my analysis. To briefly explain, an uptrend is defined by higher highs and higher lows, while a downtrend is defined by lower highs and lower lows. A trend reversal occurs when this pattern breaks. If the price breaks below the most recent low after reaching a high, a downtrend begins. All right, let's take a look at the USDJPY chart. We'll start by reviewing last week's price movement. This is the weekly chart. Last week, we saw a bullish candlestick with wicks on both ends. This followed a bullish candlestick from the week before, which had a long, lower wick, suggesting a rebound from the weekly support level. Next, here's the 1-hour chart. The yellow vertical line shows where the week began. At the start of the week, price temporarily fell after hitting resistance at the 4-hour lower high. From there, the lows started to rise, and price eventually broke above the 4-hour lower high, which shifted the 4-hour chart into an uptrend. Then, following the employment data release, price pulled back to retest the resistance line and bounced again. Next week, we need to keep an eye on whether this bounce from the weekly resistance line leads to a continued upward move. Now let's return to the weekly chart and analyze the current market conditions. This purple line represents the key support level. Last week, price bounced without breaking below this level. Since the candlestick body didn't close below it, according to Dow Theory, the weekly chart is still in an uptrend. However, because the pullback has been deep and the price failed to break the previous high, we can say that selling pressure is starting to build. In other words, the market direction on the weekly time frame is becoming less clear. If you want to understand Dow Theory in more detail, I highly recommend checking out the other video where I break it down step by step. It's essential knowledge for trading. While we are currently seeing a bounce from the weekly resistance line, we must also consider the possibility of a bearish wave pattern forming here. Looking ahead, there are two main weekly scenarios. One is a 3-leg downward move, and the other is a continuation of the uptrend. If the downward 3-wave structure plays out, the next resistance level to watch is this one. It aligns with the target of a bearish N wave and has acted as a key support resistance zone in the past. Now moving on to the daily chart. Currently, the price is still in a downtrend within this wave. The most recent lower high is here. Since the downtrend remains intact, we should also consider potential scenarios like a breakout above the weekly resistance line or the formation of a W bottom. You can also draw a descending trend line like this one, which helps gauge how long the selling pressure might continue. Let's move on to the 4-hour chart. Here's the wave structure I'm watching. Last week, price broke above this 4-hour lower high, confirming a shift into an uptrend. The current 4-hour key support, or swing low, is here. As long as this level holds, we can continue to consider the 4-hour chart as being in an uptrend. If the uptrend continues, this previous 4-hour resistance level may now act as support, or we may see a higher time frame uptrend develop before this key support level breaks. However, if price does break below the 4-hour swing low, there's a higher chance that the weekly chart will begin to form a 3-leg downward wave. You can also draw an ascending channel like this, which may serve as a guidepost for when the uptrend could start reversing. Now let's look at the 1-hour chart. We're seeing clear higher highs and higher lows, which confirms the uptrend. The current key support is here. Since both the 4-hour and 1-hour charts are in an uptrend at this point, if we see bullish reversals on the 5-minute or 15-minute charts, it would offer a good opportunity to enter a long position. To summarize the multi-time frame outlook, the weekly chart lacks a clear direction. The daily chart is still in a downtrend. Both the 4-hour and 1-hour charts are showing uptrends. Now let's talk about the possible trading scenarios going forward. First, let's consider the bearish case. Price has already hit the weekly resistance line and completed its initial downward target. This means a bullish reversal is possible, so it's not the best time to enter a sell position. Since the 4-hour and 1-hour charts are both in uptrends and price is near key resistance, selling here would be risky. However, if price drops and breaks below the 4-hour key support, that would be a signal to start looking for sell entries more actively. If price rises instead, then this line becomes the new swing low. If that level is broken afterward, confirming a return to a downtrend on the 4-hour chart, we can expect a bearish wave like this to form. In that case, we should start seeking sell opportunities. If price continues to rise significantly from here, this resistance level would be the next key level to watch. It was previously the neckline of a failed inverse head and shoulders pattern and has acted as a strong reaction point in the past. If we see a reversal here, especially a bearish shift on lower time frames aligned with the daily downtrend, then it could offer a strong selling opportunity. Next, let's discuss the bullish scenario. In this case, we're assuming that price will bounce and rise without breaking below the weekly resistance line. But keep in mind that the daily chart is still in a downtrend, so caution is needed. There are two potential entry zones for long positions. First is this level, which was the previous 4-hour lower high. If price finds support here and bounces, that could be a good buy opportunity, especially if we see a bullish reversal on the 15-minute chart. Second is around the 4-hour key support zone. Entering long around here would be in line with the ongoing uptrend on both the 4-hour and 1-hour charts. Also, this neckline of the potential double bottom could act as support again. If you are in a sell trade near this level, it may be wise to consider taking profits. How did you find today's analysis? If you found it helpful, please give it a thumbs up and subscribe to the channel. I hope your trades go smoothly and successfully. Best of luck.